On Wall Street, investors bid up stocks, sending the Dow to a new record high close as they get a clearer view of the post-election landscape. The blue chips gain 19 points and the Nasdaq rises 9.
In Washington, the new leadership on Capitol Hill is already shaping up the agenda for the 110th Congress. We'll have complete coverage of just what the changes could mean to Wall Street and Washington.
Shares of Cisco Systems take off in after-hours trading as the maker of networking equipment turns in better than expected earnings after the bell. We'll get the latest from Cisco's CEO, John Chambers.
And Microsoft makes it official, setting a final rollout date for consumer use of its new Vista operating system. The software giant says it's the most secure product it's ever put on the market.
I'm Paul Kangas.
And I'm Susie Garup. This is Nightly Business Report for Wednesday, November 8th.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Democrats celebrated today their big gains in Washington, and that propelled blue chips on Wall Street to a new record. The Dow added almost 20 points, closing at 12,176, and the Nasdaq rose 9 points to a nearly 6-year high. Investors spent the day assessing which businesses are likely to benefit over the next 2 years from the new Democratic leadership on Capitol Hill. Scott Gervey reports.
The stock market dropped sharply at the open, but recovered almost immediately. Investors apparently shrugging off the likelihood of any major market impact from the shift in political leadership in Congress. Analysts say Wall Street was already anticipating a shift toward the Democrats in this midterm contest, but with the economy strong, few feared the outcome.
I think the results of the election are factored in by the market. The market was anticipating that we would still have divided government. That is the case. And in that regard, we don't anticipate a lot of big changes in economic policy coming out of Washington.
There were interesting sector movements today, with agriculture surprisingly strong, some speculating a result of the Democrats' support for alternative fuels. There was weakness in the healthcare and pharmaceutical sectors. These are areas where Democrats are generally seen as supporting government constraints as a means of making healthcare more widely affordable. Stocks in companies doing stem cell research rose. Reversing the ban on federal funding of stem cell research is one of the Democrats' announced goals. But in spite of these specific moves, the markets in general took the election in stride, seeming to be more glad it is over than upset with the results.
I think people were maybe looking for evidence that there was a real shift in Americans' thinking, whether anti-globalization or protectionism registered as a big theme, whether we'd see an endorsement of bigger government, more regulation. I don't think we really saw that in the election. That's not what this election was about. So I think the markets got worried about that, but now that the outcome is behind us, they know it's going to be pretty much business as usual for the next 2 years.
Analysts say the markets are also encouraged by pledges of bipartisan cooperation made today by leaders on both sides of the aisle, although they observe the pledges are easy to make, but have been difficult to keep in the past. Scott Gervey, Nightly Business Report, New York.
Wall Street opened with a modest sell-off on the election results, ending the Dow off 31 points and the Nasdaq down 7. A rise in oil futures and political uncertainties kept stocks on the defensive through the noon hour, with the Dow still off 31 points, but the Nasdaq improved to a 2-point gain. The market's mild downturn attracted buyers this afternoon, lifting it to a positive close. Dow Industrial Average gained 19.77 to a new record closing high at 12,176.54. The Nasdaq Composite was up 9.06, ending at 2384.94. Standard & Poor's 500 index added 2.88 to 1385.72. In the bond market, the 10-year note rose 6/32 to 101 and 27/32, putting the yield at 4.64%.
A blockbuster quarter for Cisco Systems, which reported record quarterly profits and sales after the market closed today. The world's largest maker of internet gear posted earnings of 31 cents a share in its fiscal first quarter. That was 2 cents more than estimates. Cisco's revenues also came in higher than expectations, up 25% to $8.2 billion. $300 million more than estimates. Contributing to that sales gain, Cisco's acquisition earlier this year of Scientific Atlanta, the maker of TV cable boxes. The stock surged as much as 7% in after-hours trading after closing at $25.10 in the regular session. Joining us now, Cisco CEO John Chambers. Congratulations, John, on a great quarter.
Susie, thank you very much. It's a pleasure to be on your show again.
You told analysts on the conference call after your announcement today that you're forecasting between 24 and 25% revenue growth for the second quarter, the current quarter. That's really big. What's going to be driving that growth? Where's it coming from?
Well, this is kind of the exciting thing about our announcement today, and really where Cisco finds itself in the market. We're growing in all of our key geographies, whether it's in the emerging markets, Europe, North America, Asia. We're growing across all of our products, and it's not so important their names in terms of routing and switching and new advanced technologies and services, but the balance is really good. And we're growing in large customers, small customers, the home marketplace, and service providers. So it is that balance, Susie, that is so unique. But perhaps the key takeaway is the network's changing from something that you travel through to it's going to, in our opinion, become the enabler of all forms of communications and IT, which is a nice way of saying whether you're in the home marketplace as a consumer or you're in the business side of the house, the role that networking will play in your future becomes more and more important. And candidly, if Cisco executes well, our growth should be there.
So I guess that CEOs and chief investment information officers have been budgeting for technology spending. What are they telling you when you meet up with them?
Well, I think that more and more of the CEOs and government leaders as well are understanding not just technology, but especially network technology will enable their ability to be more competitive in this global environment, to drive productivity more, to enable better service if you're in government to the citizens. So in many ways, technology, and especially network technology, is agnostic in terms of form of government or business. It just enables us to do our business better, to be entertained better, or to provide services such as healthcare and education more effectively on a global basis.
How about economic conditions? How is the U.S. economy helping or holding back your business?
Well, we view the U.S. economy as solid. We were a little bit more cautious than some of our peers were 2 quarters ago, a little bit more optimistic a quarter ago, and this is how kind of Cisco views a market. We don't react to the ups and downs, and I think that allows us to plan 3 and 5 years out. We see the U.S. economy at the present time as coming in for a soft landing. Time will tell if that's right or wrong, but our business in the U.S. was extremely solid, growing at about 19% year over year, growing 30% in service providers, 20% in the enterprise marketplace, 20% in the commercial marketplace, and in the single digits in the consumer, Susie. So again, it was that balance that was exciting.
That's very impressive. There's been considerable discussion about what impact the yesterday's elections and the change in the Democratic leadership in Washington is going to have on American business. In your view, what impact do you think the changes in Congress are going to have on American business?
Well, and let me just talk about my area of expertise from a technology perspective. Which political party is in power is kind of an agnostic issue. In other words, the Democrats and the Republicans both view the value of high tech as being very large. Secondly, they view the value of networking, whether it's for education or healthcare or in business, as being very positive. So whether it's in this country or around the world, I think you find that government leaders, regardless of the political party or form of government, are very positive on technology, especially on networking technology, and Cisco forms very tight relationships with government leaders.
But in that sense, do you think any change in U.S. government spending or war priority spending will impact Cisco in particular?
Well, we do well regardless of where the spending goes. Our federal business was up 10% this last quarter. Our balance across the Globe was very good. So wherever they spend money, usually we'll get our fair share of it if we execute well. And that really speaks to the changing role that Cisco and the network's going to play in the future in terms of spending for communications or IT.
All right. Well, good luck with everything this current quarter. Thank you for coming on the program.
Susie, it was a great pleasure to be with you. Thank you again.
Thank you so much. We've been speaking with John Chambers, CEO of Cisco Systems.
More now on the shift of political power in Washington. Tonight, it appears that Virginia Democrat Jim Webb has held on to his lead over Republican Senator George Allen, which would give the Democrats a majority in the Senate. Democrats have already claimed a majority in the House, and the congressional shakeup has already shaken up the White House, with Defense Secretary Donald Rumsfeld resigning today. We have two reports as our coverage of Capitol Impact 2006 continues, looking at the agenda and the issues. We begin with Washington Bureau Chief Darren Gersh.
Good afternoon.
At her first news conference as Speaker-to-be, Nancy Pelosi made it clear there's a new economic agenda in Washington. Democrats will start with legislation increasing the minimum wage, cutting interest rates on student loans, letting the government negotiate lower drug prices for Medicare, and repealing tax breaks for big oil.
Democrats are working for an economy that enables all Americans to participate in the economic success of our country.
Moments later at his own news conference, the president admitted his party had suffered what he called an election night thumping. And he said he would work with Democrats to hike the minimum wage, provided Congress added protections for small business. Energy independence and immigration reform are other issues where the president said he might be able to cut bipartisan deals. And against what now seem insurmountable odds, Mr. Bush still held out hope for a legacy-making deal on entitlement reform.
Social Security is, people are generally risk adverse when it comes time to Social Security. My problem with that is that the longer you wait, the more difficult the issue is going to become. And so I'm going to keep pushing it.
But the bipartisan tone would not extend to what the president called matters of principle. Analysts include in that category Mr. Bush's top achievements, a market-driven Medicare drug benefit and tax cuts. On that turf, analyst Kim Wallace reminds investors Democrats still don't have the muscle to overcome a veto.
We're telling them to look at the facts. So the tax cuts of 01 and 03 are on the books through December 31st of 2010. It's highly unlikely that this 110th Congress takes up fiscal policy. Most of the fiscal policy pressures are backloaded for this decade.
President Bush and Speaker-to-be Pelosi did not mention trade policy today, and there's a good reason why. Washington insiders now predict 2 years of rising protectionist sentiment, and they don't expect the new Congress to renew legislation making it possible for the president to negotiate new trade deals. Darren Gersh, Nightly Business Report, Washington.
This is Stephanie Dew. One reason minimum wage is on the top of the Democrats' agenda is that voters overwhelmingly supported it at the polls yesterday. In all 6 states where an increase in the minimum wage was on the ballot, voters approved it. In Missouri and Montana, the approval rate was more than 70%.
It sets the sails and the wind at their back in Washington, D.C. You're going to see Congress push that issue, and it's not going to be complicated with other provisions that the Republicans were putting on in the last legislative session.
Voters in 8 states passed restrictions on eminent domain, making it tougher for local governments to seize property for private projects. Arizona voters went farther, approving a measure that would require compensation for seized property. But voters in California, Idaho, and Washington rejected that idea. And voters in Maine, Nebraska, and Oregon rejected initiatives to impose tax and spending limits.
Voters probably wanted to give local governments more flexibility to not restrict and hamstring their ability to solve problems, to spend money, to get a handle on land use when they wanted to.
In California, Proposition 87 failed. It would have taxed oil industry profits to fund alternative energy. Observers say that may dampen enthusiasm in Congress for a windfall profits tax on the oil industry.
I think this suggests that the incentives will move towards other areas, not so much tax increases, but other ways of motivating these new investments.
Business groups call the election results a rally of the radical middle, and experts say the ballot initiatives signal a mood against shrinking state and local government. Stephanie Dew, Nightly Business Report, Washington. Mark your calendars. Microsoft will start selling its new Vista operating system to retail customers on January 30th. The company says the new software is rock solid and ready to go and should be easily adopted by consumers. Vista includes improved security features, and Microsoft says those features make it the most secure system it has ever shipped. Also, Paul, Microsoft reconfirmed today that its Office 2007 suite of software will be on the market later this month.
Microsoft stock was among the most actively traded on the NASDAQ today, Susie, and we'll see it in a moment as we look at our stocks in the news tonight. Most active big board issue on 23 million shares. Pfizer losing 43 cents on concern that the Democratic Congress could impact drug pricing in a negative way, apparently. Motorola down 45 cents. Lucent moved up 3 cents. Merck & Company, another defensive drug issue, down $1.56. But in addition, Merck disclosed it has 4 separate tax disputes in the United States and Canada with a potential liability of $5.6 billion. ExxonMobil on the higher oil prices today gained $1.60, fifth in volume. Time Warner down 16 cents. AT&T edged up 7 cents. Sprint Nextel 35-cent gain. Walmart stores down 62 cents, and Halliburton 10th in volume rose 17 cents. United Health Group off $1.57. Managed healthcare firms are viewed as vulnerable to lower profits under the Democratic Congress. Let's have a look at how some of the other stocks in this sector fared. Aetna down nearly $1. Humana losing almost $3.50, and WellPoint down $1.32. Another group under the gun, so to speak, General Dynamics, among defense contractors, off $1.51. And let's have some others in the group and have a look at them. Lockheed Martin losing just over $1. Northrop Grumman off $1.42, and Raytheon off 72 cents. On the upside, Scottish Power PLC rising $7.30. There's speculation the company may get a buyout offer from Iberdrola. That's the big Spanish utility company. And on the downside, another Scottish firm, the insurance company Scottish Re, losing $1.63. Score Management said it will not make a buyout bid, as has been rumored occasionally. And Hospira, which makes medical products, third quarter operating earnings came in at 45 cents, a penny below the street estimate. Standard & Poor's cut its price target for the stock by $3 down to $36 a share. Sotheby's, the auction house, off $2.81. Wedbush Morgan Brokerage downgraded it from buy to hold on a valuation basis. And Medicis Pharmaceutical rising $2.49. The company got FDA marketing approval for its Ziana acne gel. J.P. Morgan upgraded the stock from neutral to overweight, and after the close, Medicis reported third quarter earnings, excluding items, were 28 cents a share, and that was 5 cents better than the street expected. Google topped the active list on NASDAQ with a gain of $2.43. Cisco closed up 26 cents, but you heard those earnings for the first quarter, 2 cents better than expected, and the stock on after-hours trading was just above $27 a share, so a nice move up. Microsoft now, of course, the new Vista is ready to go, almost, 3-cent gain. Apple Computer up $1.94. A top official at Apple gave an upbeat outlook on holiday sales for its iPod products. And then we see Intel with a 9-cent loss. That was fifth in dollar volume. Looking ahead, we see Research in Motion rising $2.10. Yahoo at 29-cent gains. SanDisk lost 24 cents. Broadcom a 9-cent drop. And 10th in volume was Dell, losing 38 cents. Trimeris moving up $1.80, nice percentage gain there, almost 23%. It's a drug developer, and it's a third quarter turnaround. Earnings of 16 cents versus a loss of 15 cents last year. And then True Religion Apparel down $5.80. The company sells upscale denim clothing and reported lower than expected third quarter profits and gave a disappointing outlook. The voting is over, and now the analysis begins. So, will the new leadership of Congress and leadership of the 50 states offer some investment opportunities? That's the topic of tonight's Street Critique. And joining me from New York is Kevin Depew, managing editor of the financial education website, Minionville.com. And Kevin, welcome back to Nightly Business Report.
Thank you, Paul.
Give us some examples of companies whose stocks should benefit from the change in congressional leadership and the reasons why.
Well, right off the bat, we can talk about Fannie Mae and Freddie Mac. And why are these companies going to benefit? First of all, they've had horrible accounting issues. Fannie Mae hasn't even filed an earnings statement since 2004, so why are they going to benefit? Well, there's the perception that the Democrats are in favor of a little more lenient rules over the oversight and regulation of those two companies. And today they were up 2% just about, so that goes to show you.
All right, how about a few other stocks that might benefit?
Well, the first that we can talk about is an ETF. Alternative energy is going to be a Democratic hot issue. There is a Power Shares Wilder Hill Clean Energy ETF that invests only in companies that are dedicated to alternative energy and energy conservation. That's a way to test that thesis out in real time. But a company I like more is called Corn Products International. And they're not even really related to alternative energy. Instead, as their name might suggest, they're related to corn and producing corn products. So that might be a good way to play it.
Maybe
I like that
ethanol? No ethanol production there?
No, they're related, so as long as the price of corn is going to go up, then they're going to do well.
How about some stocks that could be hurt by the change in leadership?
Well, minimum wage is going to be a hot button issue as well. There hasn't been a minimum wage increase in a number of years, so whether you're for that or not, the bottom line is that companies that employ a large number of minimum wage workers, such as Walmart, such as certain restaurants like Cheesecake Factory, their operational costs are going to go up.
And that could hurt, yeah. Is there another sector that you think could be negatively impacted?
Well, the pharmaceutical sector. The Democrats have made clear that they want to sit down with companies such as Pfizer and Lilly and bring the drug makers to the table. And anytime as a businessman you sit down with politicians, the results can either be bad or weird, and that's not good for Wall Street at all.
So Pfizer and Lilly and big drug companies like that you think will be negatively impacted?
Yep, I think that's going to happen, sure.
Kevin, do you personally own any of these stocks, or are you in short position, any of those that we've talked about tonight?
No, Paul, I'm not.
Okay, well, I want to thank you very much for joining us tonight and sharing your knowledge.
Sure thing.
Our guest, Kevin Depew, managing editor of Minionville.com.
Tomorrow, coffee, everyone? We talk with the head of Starbucks about where the coffee company is heading. Here's a look at what's happening tomorrow. On the economic calendar, October's import-export prices come out. Also tomorrow, the first look at the University of Michigan's take on consumer confidence for November and September wholesale inventories. As for earnings, Deutsche Telekom, Cost Pharmaceuticals, JCPenney, Viacom, and Walt Disney are scheduled to report.
Recapping today's market action, the Dow hits another record high as investors think it's business as usual after the elections. The blue chips gain 19 points, the NASDAQ adds 9 points. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org.
And finally tonight, if you manage your business by pushing the envelope, keeping people in the loop, and thinking out of the box, well, you might not be managing it for long. A new survey shows jargon like that can alienate staffers and leave the boss looking weak and untrustworthy. The survey was done by a British firm called YouGov and found almost 50% of those surveyed thought jargon caused misunderstandings about roles and responsibilities in the workplace. Among the other phrases seen as counterproductive, blue sky thinking and taking the helicopter view. So if you need to touch base with someone going forward, Paul, You should probably not hit the ground running.
I'm more likely to hit the person that uses that overworked going forward phrase. I've come to detest it.
That and all eyes are on this and that.
I couldn't agree more.
That's Nightly Business Report for Wednesday, November 8th. I'm Susie Garib. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by